Welcome to the latest podcast of What Next, looking at global property markets post-COVID-19. And today we're looking at Portugal. Well, why are we interested in Portugal in the first place, you might ask, in terms of property markets? Well, IP Global have been very active in Portugal the last couple of years and kind of wish we had 2 years earlier, really. We tried to. It's not an easy market to navigate, but Portugal really is one of, if not the poster child of post-global financial crisis rebound. If you remember, Portugal was in a heck of a state along with Greece and a few other markets back in 2008, 2009, and has really kind of reinvented itself, focusing heavily on education, moving from old industry to technology. Driving was one of the first to really drive inward investment into the country, which has in turn driven up property markets. You have golden visas, which a lot of people have taken advantage of, particularly people in Asia and China and across Africa. But not just that, just lots of tax breaks, lots of very smart economics to drive money into the country. And yeah, that has had an impact on property markets across the country, but most notably in Lisbon. And yeah, it's attracted our attention, and we've put, I think, 4 or 5 projects together now we've invested in, and we've got many clients across the globe who've invested in Portugal and are looking to already do extremely well with crazy low borrowing costs. I think one of our clients, or many of our clients, but I heard a story the other day of a 10-year mortgage at 1.5% fixed against yields, steady yields of maybe 4 plus, is kind of a no-brainer before you even get into the capital growth story in the market. But that's why we're there. But what's happening at the moment? Well, they're well ahead of their easing of lockdown restrictions, which started on the 3rd of May. Opening small shops, hairdressers, beauty salons, etc. So imagining that most of their sports people have actually had haircuts as opposed to the England cricketers who are still all wearing headbands. And then the 18th of May was the second stage where art galleries and schools and such like were all opened. And then in May, the flag carrier for their airline, TAP, returned to international operations with flights to London, Paris, etc. And they reopened their doors to tourism in June, which kind of is good news for me because we're supposed to be there in late August for a holiday, although I think we have a 2-week isolation when we get back to the UK, so we may not go. Countries that are now flying to Portugal as of the 1st of July are a long list, and I won't call them all out, but from Austria down to Switzerland in Europe, and then third-party countries outside the EU, such as Canada, South Korea, Morocco, Tunisia, are all allowing flights in and out. So again, that's very encouraging. Up until all this happening, property market was booming. The first quarter 2020 saw national house prices take a 10.3% increase, driven again by Lisbon, but also now Porto, which is a very active market. And then since May 2020, after lockdown, a bit like many other countries across the globe, including the UK, there's been a huge rebound in activity, 23% increase in transactions in May as opposed to the May the year before. And you know, there's a pretty buoyant forecast for Portugal. I mean, Lisbon's GDP forecast for 2021 is 3.6%, which in the context of what's going on across the world is not too bad. In terms of what has happened with coronavirus, the mortality rate is 3.8% compared to 14% in the UK and 19% in France. So I think this gives you a sense of how well they've handled this. And I think this really is an indication of the kind of market we're talking about as compared to the Portugal of old. In the last 5 years, much more centralised health service, a huge amount of money's been reinvested post the pre-austerity levels of closing down the funding and a lot of parts of the economy. And the national health workforce has increased by 13% between December 15 and December 19. So again, I don't use these words lightly when I say they are a poster child for recovery in Europe. They've got 15,000 healthcare workers, and the government expenditure in that time was increased by 18%, 1.6 billion euros into the health sector. So I think as a result of that, you know, you have seen them lock down the market very quickly, deal with mortality and issues around the virus very quickly. And as a result, you know, they've come out of it quickly, and I think you'll see their economy rebound quicker than probably many others around Europe, albeit, of course, they're going to be affected just like everybody else by a global slowdown, economic slowdown, which we were expecting. Unemployment, which has long been a problem, has been falling steadily over the years, and in 2021 is forecasted at 8.7%, which sounds high, but for a market like Portugal, this is again pretty impressive compared to where they've come from. There are, of course, negatives. Any podcast talking about the current economic environment in any country that doesn't highlight challenges would be one probably not to listen to. Well, they rely heavily on tourism in Portugal. And of course, people are not all going to be flying there just because they can. People are nervous about the virus still. Some people are tightening their wallets or have lost their jobs, so won't be thinking of holidays as a first priority. And therefore that will have an impact on the economy because, and it makes Portugal vulnerable because of the amount of money that pours in through tourism. That said, as I said before, they do expect a fairly quick, swift return to positive GDP. And on the back of, as I said before again, the way they've handled this crisis. So look, let's finalise this podcast by talking about what Knight Frank have to say about their property market. And they say this: there were positive signs in several markets globally that prices would rise throughout 2020, but unsurprisingly, COVID-19 has put a halt to that. Of the 20 cities Knight Frank has analysed, 16 of these will see price declines in 2020, with only a handful avoiding a fall into negative territory, either because of historic supply shortages, which probably is the UK, or because transactions were able to continue during the lockdown and these measures had minimal impact. London and Lisbon sit out in front in 2021 with forecasted growth of above 5%. In Lisbon, Portugal's handling of the crisis combined with strengthening demand and limited supply will underpin price growth. So I think that kind of says it all, really. Personally, I wouldn't just look to Lisbon. I think Porto is the second city, again, which has some vulnerabilities with tourism, but a huge amount of money going in, again, with technology, with education, service industries, financial services, and a much cheaper property market. I think you'll see a lot of money flowing into Porto, and we indeed are going to be investing there and have done and will be again in the future. But I think that Knight Frank quote says it all. They have a limited supply level. These cities are very, very old. Planning permissions are historically very difficult, so they're converting small buildings into apartments. So they have supply issues a bit like certain cities in the UK do. They're not building enough, and there is huge demand both internally, domestically, and also from overseas. So all in all, I think we'd be quite positive about Portugal's economy and the future of their property market. As always, take care and stay safe.